Hey everyone, and welcome back to the channel. Have you ever looked at a business that seems super busy, always full of customers, and just assumed they must be making a ton of money? Well, you might be surprised. Being busy doesn't always equal being profitable. Today, we're going to break down the three most important words in business and personal finance: income, expense, and profit. Understanding these concepts is the key to financial success, whether you're running a lemonade stand or a multinational corporation. So let's start with the fun part: income. This is all the money that comes into your business. For a coffee shop, it's the cash from every latte, muffin, and sandwich sold. For a freelancer, it's the payment you receive for your services. Income is the total amount of money you generate from your sales. Think of it as the top line, the big number before anything gets taken out. Let's say our coffee shop makes $10,000 in a month. That's our income. It feels great, right? But hold on, that's not the money you can take home just yet. Next up, we have to talk about expenses. Expenses are the costs of running the business. They are everything you have to spend money on to generate that income. For our coffee shop, this includes the cost of coffee beans, milk, and sugar. It's the rent for the shop space, the electricity and water bills, and the salaries you pay your amazing baristas. Even the cost of marketing, like running social media ads, is an expense. Expenses are the money flowing out of your business. If our coffee shop's rent is $2,000, supplies are $3,000, and salaries are $3,000, our total expenses for the month add up to $8,000. This brings us to the magic number: profit. Profit is what's left over after you subtract all your expenses from your income. It's the bottom line, the actual money the business has earned. The formula is simple: income minus expenses equals profit. So for our coffee shop, we take our $10,000 of income and subtract our $8,000 of expenses. That leaves us with $2,000. That $2,000 is the profit. This is the money the business owner can choose to reinvest back into the business, save for a rainy day, or pay themselves with. Now you see why a busy business isn't always a profitable one. They might have a high income, but if their expenses are even higher, they're actually losing money. Imagine if our coffee shop's expenses were $11,000 instead of $8,000. Even with $10,000 in income, they'd have a loss of $1,000. That's why tracking every single penny is so crucial. Understanding this simple relationship between what comes in, what goes out, and what's left over is the first step toward building a strong, sustainable financial future. So take a look at your own life or your business idea. What's your income? What are your expenses? And most importantly, are you generating a profit? Mastering these three simple concepts will empower you to make smarter financial decisions. Thanks so much for watching today. I hope this breakdown was helpful. If you enjoyed this video and want to learn more about building financial literacy, make sure to hit that like button and subscribe to the channel so you don't miss our next video. Drop a comment below with any questions you have. See you in the next one.